Good morning. It is Wednesday, July 21st, and this is Real Estate Economics Weekly Webinar Series. This morning's topic is Las Vegas. What we want to do is just show you part of the vast amount of information we have for this particular market area. Before we do that, let me actually just share with you the webinars that will happen during the next few weeks. Next week on July 28th is the Phoenix market. This is a change from what we said last week, so please catch that. Our national webinar will be on August 4th, followed by a California State webinar, the first of several regarding the state on the 11th of August. And we want to remind those of you who are in Las Vegas that I'll be involved in the Crystal Ball seminars in Las Vegas. It's at the Tropicana Hotel on the 29th. We'll hope you join us. If you'd like to register for this event, just go to this particular website right here, crystalballseminars.com. and you can sign up for it then, and hopefully I'll get a chance to meet you there. By the way, that particular presentation will offer a lot more detail than what I'm doing today. This is just a very small portion of that. What I wanted to do this morning in 10 minutes is show you how the actual housing market has reacted during the past several years in the Las Vegas market. The way I do that is I go to our own website and show you a series of maps and charts that we generate on our own website. This is May of year 2006. What it shows is every single transaction that occurred in that month several years ago, as well as a pie chart. As you can see from the pie chart, the majority of transactions are traditional resales, shown in blue. There's also a lot of new home builder closings, shown in green. Just a very small sliver, you can barely see them, of foreclosure sales when a foreclosure is sold from the bank to a new owner, and foreclosures, shown in red, when a bank takes over a property in foreclosure. This is May of 2006. May of 2007, look at the pie chart down here. You can see that foreclosures and foreclosure sales have begun to grow. You can see a bit more red, a bit more orange in this particular map. Here's May of year 2008, where we really hit bottom in terms of foreclosures. They made up almost or over 40% of all transactions. Just an unheard of amount right here. As well as a lot of foreclosure sales, but not nearly as many as you had foreclosures. Resales have shrunken down quite a bit. New home closings have also shrunken down. Here's where we were in May of year 2009. Now the interesting thing about this, still a distressed housing market, but look at the amount of foreclosure sales, banks selling properties back to new owners. It made up almost half of all transactions. Still an enormous amount of foreclosures, just a small sliver of new home builder sales, as it became increasingly difficult for new home builders to build homes, get financing to build those homes, and to close them. And resale volume was way down as well. And here we are for May of year 2010. A little bit of a bright spot. Resales, traditional resales, shown in blue, have expanded quite a bit. New home builder closings, there's still hardly any relative to what's gone on during the past before this recession began. Still a lot of foreclosures, a lot of foreclosure sales. Now there's a little bit of a worry spot here in that foreclosures have actually increased relative to foreclosure sales, meaning that we think that double dip, or that second wave in the housing market, manifests itself by an increase in foreclosures and a reduction of foreclosure sales. In other words, an increase of distressed inventory. Unfortunately, distressed inventory will increase slightly from last year's level before it begins to recede again. Now this is far different from most markets. Most California markets, despite the fact that there's a little bit of an increase in foreclosures, they're being matched by foreclosure sales, and the overall trend is downward for distressed inventory in California markets. Not so in Nevada, actually not so in the Phoenix market as well, a very similar pattern in Phoenix. These two markets, both Phoenix and Las Vegas, are going to show a lot of distressed inventory, and unfortunately it's going to keep prices down. Now prices in Las Vegas have hit a floor, but in terms of price appreciation, it's not going to amount to much anytime soon. Let me show you those overall trends that have occurred during the past 24 months. You can see this floor that I talked about in terms of prices hitting that floor, but very, very mild price appreciation. I'm not even sure you can call it price appreciation at this point. This is what's going on in terms of overall transactions volume during the past 24 months. It's actually gone down a bit in terms of single-family homes, but increased in terms of condominiums. There's been a glut of condominiums in Las Vegas, and they've hit a price point where they're beginning to move. This is what's going on for May of this year in terms of transactions by type. Look what's happened to foreclosures. High 2 years ago, lower a year ago. They've actually increased during the most recent month. Look what's gone on with resales. Relatively low 2 years ago, lower a year ago. They've jumped up this year, which is a good sign. New home builder closings have gone to a very, very small level, and foreclosure sales, when a property is sold from the lender to a new owner, jumped way up a year ago and has come back down to a level below foreclosures during the most recent period. Again, this is a bad sign. It means that distressed inventory, whereas we were burning it off a year ago, now we're adding to it, which means that overall distressed inventory held by the banks in the Las Vegas market are actually going to be a little bit higher for year 2010 than they were a year ago. It's going to take a bit longer for this market to recover. Mortgage amounts to loan to value, they're down. This is a reflection of tightened lending practices, which will only tighten even a bit more during the next couple months as banks brace for this new legislation that's about to pass. And finally, transactions by price range. You can see that most of the transactions are occurring in the $100,000 to $200,000 price range. A lot of activity in $200,000 to $300,000, but overall the activity is still much, much lower in the upper price ranges than it was 24 months previous. For those of you who are unfamiliar with real estate economics, our services are listed here, both in terms of consulting services as well as web-based information tools. We welcome you to explore our website. We're grateful for you, those of you who have joined us this morning. We hope you join us in Las Vegas at the Tropicana Hotel on the 29th, as well as join us in our continued series of weekly webinars. Thanks much. Bye.